Bitcoin cooled into the mid-70s this week, but the price wasn't the headline. The real story was the behavior of the biggest players in the market and how their moves shaped sentiment, flows, and structure. Today we're breaking down the signals that actually mattered, what they mean for beginners, and how to read a week like this with confidence. So welcome back to CoinOps. If you're new here, the channel is built for beginners who want the clear, simple crypto news without hype. Today, we're covering everything that moved Bitcoin this week, from ETF flows to whale behavior to institutional tools that just came online. Bitcoin traded in a tight range around 75 to 77,000. Volatility stayed low and liquidity stayed thin, which usually means the market is waiting for a catalyst. Sentiment came in mixed, with a slight bullish lean, but retail confidence dropped to its lowest level since December. For beginners, this kind of price action is normal during periods of rotation. It's not a breakdown, it's a cool down. BlackRock moved more than $1 billion to Bitcoin to Coinbase Prime to process ETF redemptions. A redemption simply means investors cashed out shares and the fund had to move to Bitcoin to settle those withdrawals. This created a 6-day outflow streak, the largest of the year. But analysts frame this as a rotation, not exit. Rotation means money moved from one place to another, not out of the market entirely. For beginners, this is important. Upflows don't mean selling pressure. Sometimes they just mean repositioning. Now, retail fear hit a multi-month low, but whales did the opposite. Whales are simply large holders who can move markets with a simple buy or sell. Addresses holding more than 1,000 Bitcoin climbed to a yearly high. That means the biggest players were accumulating while smaller investors stepped back. This is classic divergence. When retail is fearful and whales are buying, it usually signals confidence from experienced players. A Satoshi-era wallet moved 2,650 Bitcoin to trading desks. A Satoshi-era wallet is just a wallet holding coins mined in the first years of Bitcoin, back when only a handful of people were moving the network. Moves like this, of course, are rare. They don't always mean selling, but they do create short-term attention because these coins have been untouched for more than a decade. This added a small amount of sell pressure to this week's initiative. NASDAQ received approval to list cash-settled Bitcoin index options. For beginners, index options are simply tools institutions use to hedge or manage risk without directly holding the asset. This is a long-term positive because it expands the financial infrastructure around Bitcoin. More tools means more participation, especially from traditional finance. Now, there were no major macro shocks this week. The market is still digesting ETF rotation and adjusting to lower volatility. Bitcoin structure remains intact. Support levels held, whales accumulated, retail stepped back, and institutional tools expanded. This is the kind of week where the signals matter more than the candles. Heading into today, May 25th, Bitcoin sits around 75,000 with mixed sentiment but stable structure. The biggest takeaway is simple. The people with the most Bitcoin continue to buy, while the people with the least Bitcoin step back. That's a signal worth paying attention to. So if you want a clear framework for reading weeks like this, my book Understanding Crypto, a clear guide for new investors, is out right now. The Kindle version is live, of course, and the hardcover includes worksheets to help build your foundation the right way. As always, I will put a link into the comments. So you're going to start seeing long form news here every week. Sorry about the stumble there. Along with short form updates you're already used to. Same channel name here, of course, CoinOpsHQ. Stay locked on both sources. TikTok, CoinOpsHQ. YouTube, CoinOpsHQ.